Hello everyone, welcome to the Home Buy webinar. Today we're talking about Homepath. What is Homepath? Homepath is a conventional mortgage, and it's a conventional mortgage that's only funded on properties owned by Fannie Mae. Now, how did Fannie Mae acquire these properties, you're probably asking. Fannie Mae had originally backed the loan made on the property by a bank, and then taken the property back through a foreclosure. So they now own the property on their books, and this is a conventional mortgage. It's different to the standard conventional mortgage in two ways. The first way is that there is no mortgage insurance involved, and secondly, there is no appraisal involved. So two huge differences on the Homepath conventional mortgage compared to the standard conventional mortgage, where if you're borrowing above 80%, you do have to have private mortgage insurance. And of course, you can't imagine closing without an appraisal. So this program is definitely unique in those two ways. Homepath advantages for you. Let's take a look at some of the advantages for the buyer that's financing their purchase of the Fannie Mae property using a Homepath loan as opposed to a conventional mortgage or even FHA or VA. Now, firstly, you will experience typically a quicker closing. Why is that? Remember, there's no appraisal. So you're saving yourself typically from 3 to 4 or 5 days on turn time that is applicable to an appraisal. And secondly, there's no mortgage insurance. And of course, as you probably know, private mortgage insurance in the conventional setting requires a separate underwriting process by the PMI company. There's many PMI companies out there, Radian, Genworth, MGIC, and many of those other ones. And all of these will typically take 2 to 3 days to underwrite the file over and beyond the normal conventional mortgage underwriting that's conducted by the lender. So if you cut that out from the process, you do save some time and can close quicker. Secondly, the spouse's credit and obligations are not reviewed. Now, this is very different to what happens during an FHA or a VA or even a USDA loan. All of those three are backed by the federal government in one way or another. And, on those programs, if you have a spouse that's considered a non-borrowing spouse, someone that's not going to sign on the loan, their credit and their obligations still have to be reviewed, and the underwriter would typically add to the total debt ratio the monthly obligations of the non-borrowing spouse, and that can lower the borrower's purchasing power. Thirdly, there's obviously a lower down payment. FHA loans require 3.5% down, and most conventional loans now require a minimum of 5% down, and typically, depending on FICO score, 10 or 15% down. And of course, if the buyer does not qualify for private mortgage insurance, then you're looking at 20% down, making it an 80% loan. Now, on the Homepath program, you can borrow up to 97% without mortgage insurance. And of course, that means you've got a lower down payment. Now, fourthly, a more favorable response from the seller. Who is the seller? The seller is always Fannie Mae when you're considering a Homepath loan. Now, most sellers, when they're selling a property, tend to shy away from FHA, VA, or USDA, government-backed types of programs, just because historically they've gained a reputation for taking longer to close. Often there's more appraisal-related scrutiny. The underwriting requirements sometimes can be kind of nitpicky, and therefore you find that sellers tend to favor conventional loans to begin with, and then when you take it to the next level within the arena of conventional, sellers would prefer a Homepath loan because there's no appraisal and because there's no private mortgage insurance underwriting needed. Now, in this situation, the seller is Fannie Mae, and they're typically always going to prefer a Homepath loan on the buyer's contract offer as opposed to any other type of loan. Special incentives from seller. Not only does Fannie Mae allow up to 6% closing cost concessions for the home buyer when they're using Homepath financing, but from time to time, Fannie Mae encourages the use of the Homepath loan by providing even more special incentives, such as a whirlpool or various other things. And you should contact your lender that's able to do a Homepath loan for you to get the latest, greatest details on what Fannie Mae is offering right now. Lower payments. How is that possible? Remember, FHA mortgage insurance at the time of this recording in late 2011 was at 1.15% per annum of the loan amount, of course, chopped up into 12 monthly payments. And even the USDA program, which historically never had mortgage insurance, as of November 2011, carries mortgage insurance at 0.3% per annum. Now, when you compare those two programs to a conventional Homepath loan at 97% without mortgage insurance, it is very likely that you'll have a lower monthly payment using Homepath on the same purchase price than by using FHA or maybe even using USDA financing. We're going to compare payments now on a $200,000 purchase price at an approximate interest rate of 5.5%. Now, please realize interest rates fluctuate, daily, not just weekly and monthly, but every day, and sometimes multiple times in a day. So depending on when you're watching this webinar, you might consider that interest rate to be too high or too low. Please contact your lender to get the scoop on present interest rates. This is just a sample interest rate at the time of this recording. The FHA principal, interest, tax, and insurance payment, including the mortgage insurance that you see in the center there, of about $184 a month, comes to $1,541 a month. Now, we've kept the tax and insurance component the same across the board, to be fair, so we're comparing apples to apples. And you can see on the right that the same purchase price at the same interest rate on the Homepath option gives a monthly savings of $190 a month. Now, let's be even more accurate. Typically, the interest rates on the Homepath loan, because of the back-end costs involved, are a little bit higher than what you might find on any given day with an FHA loan. Therefore, we've gone ahead and bumped the interest rate here to 6% to compare it to an FHA 5.5%. And even then, you're looking at monthly savings of about $128 a month at a 0.5% higher interest rate. And of course, realize that there is no mortgage insurance underwriting time delay, and there's no appraisal expense. So comparing apples to apples, oranges to oranges, FHA and Homepath, you can see that typically you're going to come out ahead on the Homepath program in terms of your monthly payment. Now, where can you find properties that are eligible for Homepath? Remember at the beginning we got through saying that Homepath is only applicable to homes that are being sold by Fannie Mae. The website that you can locate these properties at is www.homepath.com. Real simple. Now, your real estate agent should be the one that's helping you with the offer on a Homepath-related property. Most real estate agents are very familiar with the Homepath program, and they'll know how to make the offer. Remember, they're dealing with Fannie Mae, the seller, so there are some nuances there, and you really don't want to go at Fannie Mae by yourself. It's better to use the free services of a real estate agent whose compensation is handled by the seller and not you. So we strongly encourage you to use a real estate agent to make offers on a Homepath property. Finally, let's take a look at the advantages for investors. Everything that we've discussed so far typically applies to buyers that intend to occupy the property that they're purchasing. However, Fannie Mae has made the Homepath program available to investors, and this helps them unload properties off their books that they really don't want to be holding on to. Now, there is a 15-day waiting period during which they will only accept offers from buyers that intend to occupy the property, and after that period is completed, they can accept and take offers from investors. Now, the beautiful thing about Homepath for investors is that compared to the standard typical 20 or 25% cash down payment requirement to purchase an investment home, the Homepath program allows the investor to buy a Fannie Mae owned property with just 10% down. Yes, you heard that right, 10% down. Pretty incredible. Again, 3 advantages for the investor: no mortgage insurance, no appraisal, and typically a quicker closing. There really is no better way to purchase and own an investment property using financing than by using the Homepath loan. It is a terrific program for investors. Fannie Mae has made all their properties available on homepath.com. Now, in closing, I should say there is a derivative of the Homepath program known as the Homepath Renovation Program, and feel free to contact us for some details on that. That involves purchasing a property being sold by Fannie Mae that might require some work, a little bit of TLC, some remodeling or whatever, and the buyer can actually finance that into the purchase price, and that's the Homepath renovation loan. Well, we sure hope that you found this home buyer webinar useful. There are several other home buyer webinars recorded on our blog and our YouTube channel. Be sure to check those out. They're free, and feel free to forward those on by email to your friends, family, colleagues, affiliates, buyers. Thank you for watching, and we wish you the very best in your home search.